welcome again to another special edition of a Radio Chat. Today we have a special guest coming from the real estate industry, and I'm really excited to see the different perspective that he will share with us. Ben is a highly experienced and renowned property development advisor with over 23 years experience in business, tax advisory, and property development and advising on over $3 billion in property transactions. Complementing his extensive advisory career, Ben also has a broad entrepreneurial background, which includes developing residential land estates and operating various property and mortgage wholesale funds. This unique combination of experience as an entrepreneur and business advisor allows him to provide both highly technical and commercially minded advice to his clients. Ben's key areas of specialization are in property development, wholesale fund management, small business enterprise advisory, property investment, and self-managed super fund strategies. Ben is also an owner and original founder of one of the largest property development networking groups in Melbourne, and the creator of a property development masterclass. Ben, thank you very much for joining me today. And if
Thanks,
we could
Al.
start with a bit of your story and how did you get started in your business?
Yeah, okay. So it's an interesting one. So I suppose I might just backtrack a long way back to
Oh,
obviously when I left high school or secondary college. At that stage, my dad sat me down and said, "What do you want to do?" And at that stage, I didn't really have a clue. I didn't really have any plans for the future. I didn't really I didn't really understand. I didn't really have a career path or anything else planned out.
right.
And so essentially I said to him, I said, look, I'd like to do maybe something in business, something entrepreneurial, but I don't really know what I want to do. So he said, well, if you're going to be in business, you need to understand the numbers because business is all about numbers at the end of the day. And he said, so I would encourage you to go and do an accounting course or a business accounting course. So that's what I ended up doing. I ended up going to doing a business accounting course. And then, so that's what started me in accounting all those years ago. Although once I left university, my first role was actually in marketing. So between a couple of people I knew at that time, they were invested in particular internet technology, and this was around the time of the internet bubble, where
Okay.
anything IT related and was gaining a lot of interest within the investment community. And essentially, we did a backdoor listing. We bought out a mining company. So this was at the age of 22, and I helped equity raise for that particular organization. In that capacity of equity raising, they basically said to me, what role do you want to take on in the organization? Because you've done such a great job and we want to reward you. And I actually started out being, again, the national sales and marketing manager at the age of 22 for a listed, for an ASX listed company.
Mm,
Being completely green, having no idea what I was doing. But at that stage, I thought that I don't really want to be an accountant. I didn't see myself as an accountant, and I wanted to do the marketing role. As everyone knows, with the IT bubble, that all burst. I saw the writing on the wall, and I thought, okay, I'm going to go back to my roots, go back to my education, and I'm going to go bunker down into more of a traditional accounting role, which is what I did. And then I started to get in tax advisory, which I probably enjoyed the most out of most of the accounting roles because I felt that, you had the opportunity to really work with a vast amount of clients from all kinds of various different industries. And it taught you a lot about their businesses and
yeah.
about what they do. And it also taught me a lot about what makes a successful business and a successful entrepreneur. So from that, and again with my own entrepreneurial aspirations, within my role within an accounting firm at the time as an associate director,
Yeah.
there was an opportunity to basically invest into some property development transactions with a client.
Yeah.
That role ended up extending from just being an investor to taking on essentially being the development manager for those particular projects. And from there, we then went on to basically to leverage off someone else's AVSL to then capital raise for a number of other projects, mainly in residential land subdivisions.
Okay.
So that's how I got into property development. Prior to that, I've always liked property. I've always invested in property. So at the age of 22, when I was in that, when I cashed out of my shares from the IT company, the first thing I did with those funds was go and buy my first investment property, which was a little flat in Murrumbeena, and being close to the university there at Caulfield, at Monash Caulfield. That's basically my first foray into property, and essentially I had the renter that I when we first put the property up for lease, I had a renter pay me 12 months rent in advance of
Okay. Wow.
which was brilliant at the time, and basically paid me, I think, 10 or 15% more and 12 months rent in advance. I was an international student. So I then took that money and then purchased another unit around the corner as a deposit. So obviously they were a bit cheaper units back then. But that's how I initially got into property, and that started my affinity towards property in those early days. And then I've extended that obviously over time into property development as opposed to just being a property investor. So that's how I started out, and then essentially I've then as an advisor, I've then started providing more, I suppose, focused services in that space and more specialized services. A lot of it's been built around my own experiences as well, not just the technical tax elements and the financial management elements with property development, but also with my other entrepreneurial experiences in running funds and obviously being a development manager and also running a mortgage fund as well. So I understand the financing aspects of property development. So basically most of the things that I've been involved in entrepreneurial ventures have all been focused around property development. It just coming from a lot of different angles, and that's me again educating and looking at opportunities in the industry. You don't always have to be the developer to make money. There are other areas and entrepreneurial activities that feed into property development that a lot of, I suppose, people that may have had aspirations to be a developer may end up venturing off into as well. So that's how I started out in property development. That's how I started out in accounting. More recently I've just started up my own practice under Payne Advisory Group.
Okay.
And again, providing more focused and a more of a boutique service and a personalized service to property developers, and really with the aim of being their close strategic partner in helping them deliver successful projects.
Right. So essentially you're providing, so what's your ideal client, providing some targeted and specialized services?
Yeah, so ideal clients are essentially, for me, it's really anyone in the property development space. It's either, whether you're a greener developer that's just starting out and needs a lot more support and advice on all kinds of different areas on property development, but particularly on tax or financial management side, or understanding finances and understanding various different structuring elements to property development in terms of your legal structures that you should use.
Yeah.
Making them also understanding with property developers what they've got at risk when they go into development. So making sure that we've got the appropriate structures and asset protection strategies before they venture into property development. Okay. So it's leading from that side, but then also at the other end, for property developers looking to scale. So a lot of developers start out with their own funds when they go into the first projects, or it might be close family and friends funds when they first start out. But over time, and often it's more speculative. So they've often got a day job, and property development ends up just being a side investment opportunity. But once they go beyond that and they're looking to, I suppose, create and become a career property developer and make it their full-time role, they need a lot more support and guidance, but also more commonly, they need to access a lot more capital. So for those clients that are looking to raise capital and don't have, I suppose, the expertise in operating funds, and also not wanting to operate funds, because again, funds management and the operation of funds is a business in its own right, and it can become quite complex and quite time consuming. So with those clients, what I'm looking to do is to try to provide those particular services so that they can get on to doing property development. So I can create the platform to enable them to equity raise and provide basically all the services to run the fund for them so that they can get on with just doing what they're good at and what they really want to do, which is develop properties.
Okay.
That's probably the ideal clients that I really gravitate towards. And really, just even in the entrepreneurial space, any client that's entrepreneurial that really, I suppose, it's got ambition and drive and really wants to, I suppose, do something different. So anything that I can get excited about, I'm always excited about anything to do with property development. But even, I've got a lot of other clients that are in the tech space as well, and a lot of prop tech spaces that, I get quite excited about their businesses and about what the opportunities are that they've got, and that also drives me and also excites me in terms of my role that I've got to play to be able to support them to get to where they want to go.
So if we sort of go back and refer to the Riddle board game, which is a theme of that tour. If you were to explain to a 12-year-old kid, what do you do in very simple terms? What would it be?
And I've thought about this one a little bit, and it's challenging because to put it in the most simplest terms, basically I provide services to support developers to be successful. And that's in the most generic and simplest terms that I can provide. But obviously it's a lot more technical than that, because a lot of the things that I do are quite technical, particularly when it comes to a lot of the tax and the funds management side of things that I do. But if I was to explain it to a 12-year-old, I would say, see those developments down the road, or see that apartment building or those townhouses. I provide all of the services to be able to support that particular developer to be able to create those products and to be able to create those buildings.
And that's a sort of expert services that I've introduced in the board game as well, from a conceptual perspective, because then anyone playing the game, whether it's a 12-year-old kids or adult, then at least they understand, okay, who are the players they need to engage, who are the players they need to talk on a daily basis that can provide that expert advice. Because in property development, as you know, you can't do it on your own. It's a team sport, and you need to rely on some competent and expert, specialist people to help you accomplish it.
And you can't be great at everything. I think even over my journey, to a certain extent, I've tried to be. And the more it goes back to the same concept or the old concept of uh, in terms of when you look at the concept of I'm trying to remember the saying about the how does it go? Master of none,
Jack of all trade, master of
jack
none.
of all trade, master of
Yeah.
none. There you go. Thanks, Al. But and I think a lot of accountants over their journeys have tried to be that to their clients.
Mm.
To some extent, their clients want them to be that to them because they feel comfortable and there's that trusted relationship that you've got with an accountant. But by being that jack of all trades, you end up losing that specialist service or that specialist advice that you can give to somebody
Yeah.
because your time's consumed in trying to be so many different things to so many different people. So that's why I've tried to specifically focus on certain industries or certain types of businesses or business owners. So I can provide a more of a specialist service and then not try to provide every service under the sun. So you'll see a lot of other accounting firms will be finance brokers and financial planners, and then they'll try to do all kinds of other different areas, which, and again, I've been in accounting practices before in the past that have tried and attempted to do those.
Yeah.
But unless you're the size of a big four accounting firm, like a KPMG or a Deloitte or someone like that, where you've got, thousands of staff, you don't have the time and the ability to be everything to everyone. So
that's so true. Yeah.
So the same concept then applies to a developer. You're not going to be the expert in everything. So surround yourself with the people that are and focus on what you're good at. Focus on what your skill sets are that you're bringing into development. If your skill sets are sales, and if you come from a selling background, or if you come from a business development background, use and in property development, use those skill sets that you've got to sell the property, but also to also sell the investment opportunity out to investors, because that's your skill sets. But don't try to be then the expert on actually on law, or the expert on
On
tax
structures, tax,
on construction, or because at the end of the day, you're not going to be. It's good to have knowledge in a lot of those areas.
Yeah.
I always encourage everyone to go out, build your knowledge so you've got a basis and the foundation of the basis to understand from a real high-level perspective.
High-level perspective, yeah. And you have to be, because it's quite a broad skill set requirement. So you need to understand the whole spectrum.
Correct.
At like a high level, but then when it's go down to the trenches, you can't be an expert in every single field. You cannot.
Correct. So even from, like, if we take the most, I suppose, acquisition stage of a property development, in acquisitions, I'll do obviously a lot of the legwork to when I'm acquiring a site, and when I'm in acquisitions mode, I'll do a lot of the initial legwork around the planning concept, so I can quickly eliminate property, so I'm not wasting too much time on properties that just don't work from a planning perspective.
Yeah.
But I'm also doing it obviously because I've got a background in accounting and financial management. I'll also do obviously all the due diligence from a financial management point of view as well. But once I get to a certain stage and I get through I pass my first cut of my financial feasibility assessment, and I get past that first stage, I'll always bring a planner in, because there's going to be elements that I've missed, or even say, for example, with planning, you could sit down there and you can read the schedules within a planning zone, and based on those schedules, you might say, okay, well, this planning zone allows me to go to allows me to build a 3-story building in that area, and potentially might allow me to do 4 townhouses. But what you don't know from a planning perspective is a lot of these issues that might come around and issues around neighbourhood character. So although that a planning zone allows a 3-story building, will the planning department, will the council actually approve it in that
That's
area?
right. That's right.
And they'll always fall back on concepts around neighborhood character. So unless you've got those relationships and those understanding, unless you're in that business and you're working,
Yeah.
doing planning applications every day
Yeah.
on dealing with those specific councils every day, you're not going to know. I'm
Yeah.
not going to know.
Correct. You won't know. Yeah, because it's
So
not
I
called.
always rely, I'll never go and buy a property without running it past my planning consultant first. I'll never buy just on the whim of my own what I believe my expertise
Mm,
is,
yeah.
and off the back of my own knowledge. I'll always go and get additional expertise to be able to provide the more specialist knowledge in those areas, rather than me trying to think I know everything
Mm, yeah.
about everything in property development. So, and I think that's an important step, and that a lot of people fail to do, particularly a lot of the, I suppose, the
And,
greener
and,
people
and,
in
and
property
you're quite
development.
right, because a lot of starter developers, they try to save some money, which is sometimes it's a different type of mindset. They try to do everything themselves at the start because they don't have zillions of dollars to spend. But but they don't know the critical factors that sometimes if you miss a few things, it can burn you big time on the
Correct.
project.
Yeah.
And relying on a specialist expert in that area will hopefully save you time and money on your
Yeah.
project. Yeah.
And look, the crazy thing is, in property development, you've got so much to risk when you go into it. And the reality is that a lot of people that are, new to development don't treat property development like it's a business
Like a
transaction.
business. Yeah.
They treat it just like it's an investment opportunity, and a lot
It's
of the
like it's a
time
bit like
they
an
just
extension of property investment, right? But it's
correct,
way off. Yeah.
correct,
Property
and it's
investment.
more of just a speculation.
Mm,
But you don't speculate when you're going out and buying a site for 500, a million, $2 million. Do you know what I mean? Like, it's
yeah.
too much money to speculate on. I've got a lot of I've got clients that, and again, property developers come from all kinds of different backgrounds. There is no formal education you need to be a property developer. There is no there is no license that you need.
Mm,
Basically, if you've got access to equity, anyone can go and buy a property and be a property developer. And the problem is, because of that, a lot of people basically speculate, or they talk to a friend and their friend's gone and made some money out of a property development,
yeah.
or they've read a book or something, or they've seen some advertisements being promoted on Facebook or wherever,
Mm, yeah.
and then they think they can go and do it themselves because they think it's quite easy, because everyone makes money in property development, apparently. But so I've had clients that have come from, again, various different backgrounds, but the funny thing is that they don't often, and successful entrepreneurs in their own right, and they don't apply the same principles of their own business into the property development transactions. So where they might be quite thorough in terms of their own business,
Mm,
and if there
correct.
was any business opportunity they were to take up. So say, for example, if they were going to do a merger and buy another company for $500, $1 million,
Yeah.
the amount of due diligence that they would do on that company and that merger before they went and bought it would be quite extensive. They'd get their lawyers involved, the
Mm,
accountants involved, every specialist they know involved,
yeah.
in terms of before they undertook that acquisition. Now, but the same entrepreneurs would just go out and buy a development site thinking that they're going to make money out of it
Mm,
because, they're, I suppose, from their perspective, they look at it and say, okay, the neighbours next door's built, 4 townhouses, so I'm going to be able to do the same on this block. And, in the roughly in the back of my head, I know that Metricon can go and build a house for $200,000. So
yeah.
I can probably build a townhouse for 150. Where in actual fact, you're probably going to be building a townhouse for 350. And but these are I suppose the mindset a lot of people have when they go into property development, when they're quite green to it, that they don't use that business mindset going into property development. So I'd always
So true.
encourage everyone, treat it like a business.
Yeah.
Do
Especially
due
when you're
diligence.
when you're
research.
building property development, townhouses and apartment, it's a multi-million dollar transaction,
Correct.
right?
Correct.
And you don't want to risk it because a lot of developers got burned in the past.
Correct.
Yeah.
I've even had another
Mm.
client that I can reel off about 1,000 examples of clients that have gone wrong, and particularly even just straight at acquisition stage. I had another client that went and bought a property at auction, and it already had permits approved for, I think it was 10 apartments. And it was down on Burwood Highway in Burwood, right near Deakin University. And I asked him straight out, I said, how did you come up with the price that you paid for that property at auction for? How did you work that out, whether that
Correct.
was going to be successful? And he said, well, I went to so many auctions and I kept on losing out. So I and other similar properties sold
Yeah.
for the same amount in the area. So I just figured out that that's what I needed to pay for the site to win
Oh,
the
that's
property.
more of a gut feel transaction, and
Well,
yeah.
it's a gut feel, but at the end of the day, there was no analysis on
Mm.
what the total costs of the development were going to be, what the end value of the product was going to be when
Yeah.
it was going to be sold. So you could even work out whether it was even profitable to buy it at that point.
True.
So and so again, when I went back and I went through the strategy with him and said, okay, this is how you buy property development. This is the fundamentals that you should have been looking at when you were purchasing it. Even if it does have a permit, you've got to make sure financially that
Yeah,
this
you
is
can
going to make sense for you to go forward.
financially, you can finance and inject the amount of equity required in the project and so on.
Correct. Now, I can tell you for a fact that developer bought that site 8 years ago. That site is still undeveloped
Mm.
on Burwood
Yeah,
Highway. He's got to hang on to it for that many years for this thing to even make sense.
just miss
And you can't
opportunity.
resell it to anybody else because nobody else is going to pay that amount of money for it, particularly in this market when
Yeah,
construction costs have gone even higher as well. But nobody is prepared to pay for him even anywhere near the value that he purchased that site for. So he's probably, just to even break even on it, he's probably going to have to hang on to that site for another 8 years, and then he might be able to break even on it, or
mm.
maybe make a slight margin. But what was the opportunity cost of him hanging onto that property for essentially 16 years or 15 years
Yeah.
before he's even going to be able to develop it?
Mm.
So again,
And,
these
and
are
and and that's one simple mistake he didn't use or get the right consultant around him to advise him.
correct.
And probably at that time he was just thinking, oh, he could do it himself. Let him
Correct.
save a few grand here and there to be able to do it. Now the costs and the missed opportunity of that transaction now, he has to still keep it for the next, whatever, 5 to 10 years. Yeah.
Correct. And if you have a look at what even, property has done over that period of time and potentially what it's going to do, his opportunity cost of having that money locked up in this site just to
Yes.
maybe make a profit in, 8 years, 7 years time, or whenever it's right for it to be developed. The opportunity cost of those funds is significant. He's probably, in terms of that particular site, I think at the time he paid $2 million. The opportunity cost of that is probably going to be another $2 million that he's missed out, even
True.
just from passively investing it into property, not even without developing it. So that is for him. It's those missed opportunities, which are also he's in a fortunate position that he was quite successful and an entrepreneur, and he's made a lot of money out of his business that he wasn't in a position to be forced to be able to have to develop that property,
Yeah.
or be forced into a sale position in a fire sale. Otherwise, he would have been in real strife. And a lot of properties aren't in the same financial position that he was in.
Okay, interesting.